Good afternoon and welcome to Business Incorporated live from Lagos. I'm Chimeze Obi Iwagu. Stakeholders Forum on realizing the full potentials of the Nigerian economy through proactive capital market legislation enters day 2 today in Abuja. Brent crude holds near 7-month high, eyes U.S. stocks decline. Plus, stock markets worldwide on the rise on Janet Yellen's speech. Well, let's get started with the Federal Reserve Chair Janet Yellen's speech that interest rate hikes are likely on the way because positive economic forces have outweighed the negative for the United States now that risks from earlier this year have diminished. In her address, Yellen was careful not to give timelines on raising interest rates, in contrast to a speech on May 27 when she said, probably in coming months, such a move would be appropriate.
Incoming data are consistent with labor market conditions strengthening and inflation making progress toward our 2% objective, as I expect. Further gradual increases in the federal funds rate are likely to be appropriate and most conducive to meeting and maintaining those objectives. Although the economy recently has been affected by a mix of countervailing forces, I see good reasons to expect that the positive forces supporting employment growth and higher inflation will continue to outweigh the negative ones. As a result, I expect the economic expansion to continue, with the labor market improving further and GDP growing moderately. Although this recent labor market report was on balance concerning, let me emphasize that one should never attach too much significance to any single monthly report.
That was Janet Yellen, Federal Reserve Chair. Well, the Asian stocks have risen after the prospects of an early U.S. rate rise diminished following comments from U.S. Federal Reserve Chair Janet Yellen. Japan's Nikkei 225 index rose 0.5% in China. The Shanghai Composite was up 0.6%, while in Hong Kong, the Hang Seng rose 0.8%. South Korea's Kospi index gained 1.3% to end the session at 2011.63. Both Australia and India kept interest rates on hold today, which was in line with market expectations. And European stocks are also rallying as investors digest the latest comments from U.S. Federal Reserve Chair Janet Yellen that appear to have killed off any chance for an interest rate hike this month. Let's cross over to Frankfurt for details with Conrad Busen, DWTV Channels TV financial correspondent, standing by. Good afternoon, Conrad. Well, Conrad, Janet Yellen, the Federal Chair, has spoken, and stock markets worldwide are on the rise. What exactly is it that traders and investors like about what Janet said?
You know, to me, it might sound a bit strange, but they particularly like what Janet Yellen did not say. What she did not say was she was not using the phrase "in the coming months" in terms of when when people on the markets have to get prepared for an interest rate hike. And she had used this phrase "in the coming months" at a recent speech 10 days ago. Now, the fact that she did not use it, that she did not give any particular time perspective for when markets have to get prepared for raising interest rates precisely, is seen on the markets as a sign that we'll not have to get prepared for a rate hike at the next policy meeting next week. Probably there are only 2 more rate hikes to be expected in the course of this year, maybe even 1, depending on what events come up during the next few months that will potentially weigh on the economies. So that is, of course, a positive outlook for investors in equity who want a continuously generous interest rate, low interest rate environment, and that's the scenario that is pushing share prices, equity prices up all over the world. Here in Frankfurt, the German DAX, the blue chip index, is up 1.7% at the moment.
Right. The next policy meeting of the Federal Reserve is next week, and another big event starts this Friday. That's the Euro 2016 Football Championship. Conrad, I'm sure you're a football lover. So tell me, is this also big in terms of business?
Absolutely, Chimmy. This is big business, a big business event, and I don't mean, you know, the headlines of corruption at the FIFA, the World Championship Football Associations, which have just come out during the recent days, just in time for the start of the Euro 2016 Championship. No, I also mean that in terms of legal, decent business, the Football Championship is a big event here in Europe. And a lot of surveys are coming out beforehand that evaluate where the opportunities may lie for investors. One interesting survey is that comes from the research firm CMC Markets. It has found out that in terms of share prices, the football championships in the past have not proven to be very beneficial for the companies involved. For example, all the sponsors that hope, of course, to get a little bit of attention from the football tournament by just, you know, paying to have their banners displayed. Shares in McDonald's, for example, Sony, other big football sponsors like Johnson & Johnson, for example, the brewery Anheuser-Busch. In the past, the share prices of the sponsors have often risen during the tournament, but they fell regularly after the tournament was over. And when we are talking about sports goods makers like Adidas, it is big business. The the executive who is in charge of football at Adidas today gave an interview in one of Germany's big business newspapers, and he says that football has become an absolute super sport. Nothing can top it. But Adidas, the shares of this very important sports good maker tend to rise only before a tournament starts. During a tournament and after the tournament, in the past, very often Adidas shares have fallen. And this means that investors tend to be enthusiastic about football before a tournament starts, but when it starts, they tend to think, well, maybe it's time now to leave the share and buy it. We'll see what happens this year.
Conrad, just the last one. An analyst at UniCredit Bank has tried to predict the outcome of the Euro Championship using statistical, economic methods. Is this serious, or is it just a publicity stunt by the banker?
That's a bit of a precarious question to ask someone here in Germany. Also because the result of this study is that Germany won't become the European Championship of football. But I have to admit that this analyst at UniCredit, he used very decent econometric methods for his studies, which are valid methods in terms of when you look at the development in the economy. And he used those methods in terms of what we can expect from the outcome of the Euro Championship. The analyst and his team looked at how football crazy the population of a nation is. It also looked at how the youth teams of the nations involved had performed during recent tournaments, and of course they analyzed how the teams performing in France starting at the end of this week have performed at recent tournaments. And last but not least, France, the country where the Euro 2016 Championship happens, seems to have a bit of a home advantage, and that helps the UniCredit analyst to make his prediction. He says that France will make it. Of course, the good thing about football is the surprises that this game always has to present. So I think this time, particularly from a German point of view, we shouldn't believe too much in what this analyst has said.
All right, thank you for your time, Conrad. Do enjoy the rest of the day. Conrad Boulson, DWTV financial correspondent, reporting there from Frankfurt Stock Exchange. While the Stakeholders Forum on Realizing the Full Potentials of the Nigerian Economy Through the Capital Market enters day 2 today in Abuja. We will be joining you live shortly after this break. Do stay with us.